Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, May the 11th, 2010. Well, a continuation of the trend in the first time frame, and we have a candle with a higher high and a higher low. Unfortunately for the bulls, this is a very indecisive type candle. This is a doji type candle, and it's where we have a very small body where the open and the close are virtually in the same area. And that means that neither the bulls nor the bears made any significant net bullish nor bearish progress on the day between the open and the close, which has ramifications for the viability of the trend to the upside in this case. And also we have the long shadow on the top and the bottom, and the long shadow on the top represents downside price rejection. Shadow on the bottom represents upside price rejection, so a large battle going on between the bulls and the bears on the day. Interestingly, when this market has tried to rally up above the cloud, the top of the cloud, it's failed, and it's closed back in the cloud. The close back in the cloud tells us that the market is in a neutral, has a neutral bias. If the market was trading up above the cloud, the market would have a positive bias in the big picture terms. Below, it would have a negative bias. When it's trading within the cloud, it has a neutral bias. So we really do need to be careful about taking trades while the market's within this area. Just looking at the high of the current candle, where it's actually traded up to that 1169, and the sellers have come in as well and forced the market back down to close within the cloud. So the buyers have actually lost the commitment that they had when the market was trading up at 1169. So that's a fairly decent area of resistance for this market again. But then to the downside, by the same token, when the sellers tried to take the market down below the 1150 region, which was a previous area of support and resistance, the buyers came back in and bought the market back up, and neither side could really close the market substantially above the midpoint level, which means that neither side was in control when the market closed. So neither side has really shown any commitment, and that's why the current uptrend the market's in the first time frame is in great danger of changing to the downside once again. So very important for this market at the moment is to watch the low of the current candle for a potential lower high and lower low for the market to trade down. To the upside, obviously, the high is very important for a potential continuation of the trend, so that 1169 region is important, and then up above 1179 and to 1200 are very important areas of resistance. But the most important probably is the cloud or the Kumo, where the market will interact with next, and it's probably within this region of 1163 that was a previous area of resistance, so very important for this market. To the downside, there is potential support anywhere down through the cloud here, and there are some swing highs that were significant areas at, say, 1150 and 1133. So a very indecisive market. Bulls really do need to be quite careful of this market over the next day or so.